So this might be a crazy question, but if somebody just can't get a DSCR loan because their credit score isn't quite there, do you have anything you can do, like some sort of like magic thing that helps with the credit score?
Yes, we have some magic. Yes.
Oh.
We call it a 911 usage loan, but we help people every week raise their score so they can get a better DSCR loan, either in terms, which means your loan to value goes up, and or your rate. So you get a better rate, you get better cash flow. Even with the rate, if your rate goes down, you're going to be able to get better terms. It's one of those things that we've found out in, working with investors is probably 7 out of 10, at least, of the people we talk to have a usage problem, and it affects them everywhere they go for flips or with DSCR.
That's not what that is, a usage problem. What does that mean?
A usage loan is very common in this business that we have a usage problem, and the usage is how much are you using on your credit cards? We deal a lot with credit, a lot with fixing and flipping. There's a lot of needs for credit to buy stuff. People are getting into education, so they're buying educational products and running up their credit. So if you're above 30% on your credit cards, typically what's going to happen is your score is going to start decreasing.
Okay. I've also heard this called credit utilization rate, like it's a part of your credit score.
Correct.
Like how it's factored. So if it's like above 30%, so that's usage, utilization. Those are the same.
And if you're in this business and most people are using personal credit cards over business credit cards, that's a whole different video on making sure you're using the right kind of card so it doesn't affect you.
Yeah, they haven't been listening to Mike Bond.
Nope. But here, what's happening is we're having people come in, maybe they're at a 640 or 660 credit score, and they need to be in the 700s to get either their loan to value and or the rate they need to make sure the property cash flows. Rates are still in the 7s or 8s, if you're really like with a low loan to value, in the 6s on DSCR. So it's important to get the best rate you can to maximize your LTV, your cash flow, or just getting into a property.
Okay, so I think I'm following. Can you give me an example of how you would do this?
The first part is making sure that if we pay off, so we do a private loan. We take some private money, we pay off the credit cards, secure it with a property. Once those credit cards are taken off their credit report, next time their credit cards cycle, which means their statements come out, their credit scores will be impacted. So the first thing we do is have people go out and do a simulation, which is on MyFICO, Credit Karma, Experian, any of those kind of sites you could put in and say, if I pay off these credit cards, what will it do to my credit score? Here's an example. We just had a person in Texas who went out and did a simulation, and his scores went up 100 points. That's typically not what you see, but it was pretty dramatic. He went from 653 all the way up to over 753.
Okay.
Just by paying off his credit cards because he was maxed out. And we see people maxed out at 3,000, and we see people maxed out at 175,000. Everyone has their numbers where this is impacting them. But it's not only impacting them on the credit scores, but it's also impacting them on DTI if they're trying to do some other aspects of investing out there.
Gotcha. What's DTI again?
DTI is a debt to income ratio.
Oh, okay. So that's also something that impacts the score. So with this client that you're talking about, went on to MyFICO or Credit Karma and then simulated, like what would it look like if I paid off all the credit, and that's why his score increased so much.
Yeah, in his case, he went from a score where he could not get the loan to value he needed to up to a score where he not only got the LTV, but his rate went down. Here's a couple examples I just wanted to run through so people can put this into a real life kind of scenario.
Cool.
So a higher score means better cash flow. So I just wrote down some numbers, actually looked up real rates. But if someone comes in one lender with a 680 score and they want 80% loan to value. So they have a 680 score, not horrible, but they're looking for 80%. In this example, you're going to get an 8.8% rate. Now, if you were up to 760, your rate's going to go down to 745. What does that mean for a DSCR loan? In this case, let's just I have an example of a $312,000 property. 80% is $250,000. The difference between those two rates is $1,976 for the person who has a 680 credit score, and the person who has a 760, it's $740. So it's over $200 less per month, the one's paying than the other. How does this impact you? I mean, number one is cash flow. But let's just say your net rents after your taxes and insurance, reverse it, is $1,800. What that means is one of these qualifies, one of them doesn't.
Gotcha,
So it could mean you qualify, or it could just mean your cash flow is better.
And both things are good, right?
Both. Yeah, why not get more out of each property?
$200 more a month is not insignificant, even if it's just a cash flow issue. But if it's about actually qualifying, that's even more important, I would imagine, right?
That's hurdle number one, making sure you or your property qualify. So in this case, having the better credit score, taking that 2 to 4 weeks to get a 911 usage loan, get your credit score up, buy the property, refinance the property, whatever it may be, to get you where you need to. And then it's either, if you're refinancing, pay off the credit card usage loan, or if you're not, moving that over to business credit cards and moving your balances over there. Because the one thing, one of the tricks here is if you move them to business credit cards, which are easy to get, same credit cards, it wipes it off your score as long as it's not a Capital One. Capital One is one of the only credit cards that report still on your personal credit as long as you're paying on time.
Oh, gotcha. Even the Capital One business cards, you're saying?
Yeah.
But otherwise, usually the business cards don't.
Yeah. U.S. Bank, BOK, American Express, a lot of the Visa, Chase, they don't report on your personal credit, so it doesn't impact you as you use those for business purposes.
Gotcha. So they can go through this. They can do like a usage loan, which is using a property loan to secure it, and then that wipes it off your credit. Or they can do a business card, with the exception of Capital One, or if there's another one that reports, but most of them don't report.
Yep.
So either way, that's going to boost your credit score enough to get you to qualify or increase your cash flow.
Exactly. Yep.
Cool. It's a helpful thing you guys are doing, in my judgment.
Well, it's amazing because we're helping. I just had a lady call me. She has like 4 or 5 clients. We're going through every one of them because number one is stuck on a project and couldn't get money anywhere else just because their score is so low. So we're going to help them finish the project, plus give them money because the LTVs were good to pay off their credit cards. And he's one of those borrowers. He's maxed out, but he's maxed out like on a $3,000 credit card and a $500 credit card. So it doesn't matter the dollar amount. If you're maxed out, you're maxed out.
Mm-hmm.
And that's going to affect your score. So these scores affect your rate, which affect your cash flow, or if the property qualifies. Because some of these properties, just like we went through in this example, if the rents are $1,800 and with a higher rate, you're going to be over that, you're not going to qualify. In the same sense, there's a lot of them where here's another lender we use for DSCR, but at 700, they'll lend up to 80%. At 640 plus, they'll only do 70%. So if you're between 640 and 699, you have 10% more you have to put in their property if you're purchasing. Or if you're looking for cash out, you get 10% less. This helps so many people who are in a position that they need to just temporarily get those credit cards off of their score so they could get done what they need to do, the long-term financing, and either refinance them out or move them to business credit cards.
Well, I'm sold. So where do I reach out if I'm interested in
Reach out to us at thecashflowcompany.com. There's the little form you can fill out, or just email me at mike@thecashflowcompany.com. We walk you through. We make sure that it's something you benefit from. That's why we make you do a simulation, because if the simulation comes back and says it's not going to get you to the score you need to, we're not going to do a loan just to do a loan. The beauty is it's a private loan, doesn't show up anywhere, doesn't affect your credit score for those 30 to 60 days, doesn't show up for your DTI if you're doing something else. So it's a beautiful loan that's helping many investors just get better terms and better rates.
Awesome. Sounds like a win-win. I'm glad you're doing this work.
Thank you.
Thanks, we'll see you soon.